Hello and welcome to a discussion on recognizing revenue using the installment and the cost recovery methods. These methods are used when the second criteria for recognizing revenue, which is the collection of cash is reasonably certain, is not met. After viewing this video, you should be able to determine when to use and record revenues for the installment method and the cost recovery method. You should also be able to report sales and cost of goods sold under both methods. The installment method is used when customers purchase goods and agree to make payments over an extended period of time. Paying over time may significantly increase the risk of collection, and revenue can't be reported when the goods are delivered if collection is not reasonably probable. Also, due to uncertainty, an estimate of bad debt expense can't be made. Revenue and gross profit on the sale is recognized only after cash is received and the uncertainty of collection is removed. At the time of the sale, the customer takes the goods and the change in inventory and the receivable is recorded. The difference in the two assets is the gross profit, which must be deferred until cash is collected. Let's look at an example of the installment method for 1 year of sales. Sales were $10,000 and the related cost of inventory was $4,000. The payment terms are $500 each month and no payment is due for 12 months. There is significant uncertainty relative to the collection of the receivable, and this requires the installment method to be used to report revenue. At the point of delivery, inventory is reduced at cost and the receivable is recorded at the sales price. The difference, the gross profit on the sale, is deferred until the cash is received from the customer. Deferred gross profit is reported as a liability account. The deferred gross profit is 60% of the sales price. The 60% will be used to determine the portion of the cash received that will be reported as gross profit. The first payment is received and the uncertainty of collection is removed, and now revenue and gross profit can be reported. Sales is reported for the amount of cash collected. The deferred gross profit is debited or reduced by 60% of sales, the same gross profit percent on the original sale. Cost of goods sold is reported for the difference and the same percent of sales as the original sale. Revenue is recorded and reported once cash is collected. For class purposes, the entry can be made with a credit to gross profit. However, you will be required to show how the sales and cost of sales will be reported on the income statement. Take a moment to read through this example of 2 years of sales and collections. Notice the total sales and the total cost for each year. The uncertainty of collection requires the installment method of accounting to be used. The first step is to determine the gross profit percent related to each year of sales. The gross profit divided by the sales amount gives the gross profit percentage. The gross profit percentage will be used to determine the amount that will be reported as gross profit once cash is collected. The second step is to determine the amount of cash collections that represent gross profit to be reported. Multiply the cash collected by the gross profit percent related to that year's sales to get the amount of gross profit to report. The gross profit on the first year's sales will be $33,600. Then compute the second year. Make sure that you keep the cash related to a particular year separate and multiply by the gross profit percent related to each specific year. Once you have computed the gross profit, you make the journal entries to record the cash received. The total cash received and the total gross profit for each year will be recorded. The transfer of inventory and the installment receivable in the year of the sale is recorded. No sales or gross profit is recorded because cash is not received. Later, when cash is received, the receivable is reduced and a portion of the deferred gross profit becomes gross profit. The gross profit percent of the original sale determines the amount of gross profit. The transfer of the inventory and the installment receivable in the second year is recorded and the gross profit is deferred. The gross profit and the revenue will be recorded later in the period the cash is received. Record the gross profit related to the cash that was collected during the second year. The gross profit amount was computed previously. The gross profit is recorded and reported as shown. The cost recovery method is used when there is a very high risk that cash will not be collected. No gross profit or revenue is reported until the cash collected is greater than the cost of inventory. All cash collected above the cost of the inventory is considered to be 100% gross profit. The change in assets is recorded at the time of the sale, and gross profit is deferred until the cost of the inventory has been received from the customer. The company must keep track of how much cash has been collected on a cumulative basis specific to each year of sales. All cash collected above the cost of inventory sold is recorded as gross profit in the period the cash is collected. No profit is recognized when less cash has been received than the cost of the goods. Let's look at the same example we used for the installment method. Notice the amount of sales and the cost of sales for each year. Also notice the cash collected in each year. The gross profit is not used under the cost recovery method. The total cash collected is compared to the cost of the goods sold for each year. Once the cash collected is greater than the cost of goods, gross profit is then reported at 100% of the difference. For the first year, cash collected of $105,000 is less than the cost of inventory of $170,000, so no gross profit is reported. Cash collected in the second year is related to both the first year's sales and the second year's sales. At the end of the second year, cumulative cash collected specifically related to the first year totals $199,000, $105,000 plus $94,000, and this is $29,000 greater than the cost, and the entire $29,000 will be reported as gross profit in the year the cash is collected. Notice that the sale occurred in the first year, and the revenue and the gross profit will all be reported in the second year once cash collected exceeds the cost of goods sold. The cash collected on the second year sales is lower than the cost of goods, and no revenue or gross profit is recorded for the second year sales until cash collected is higher than the cost of goods. The debits and credits for the journal entries are the same as the entries made for the installment method. The inventory is provided to customers in exchange for the installment receivable, and the difference is reported as deferred gross profit. No revenue or gross profit can be reported until the cash collected exceeds the cost of goods sold. Cash collected reduces the installment receivable. However, since the cash is less than the cost of goods, no gross profit is reported. For the second year, the transfer of inventory in exchange for the receivable is recorded, and the gross profit is deferred at the time of the sale. Cash received reduces the installment receivable. The amount of cash received that is greater than the cost of goods sold is reported as gross profit. After viewing this video, you should be able to determine when you should use the installment method and the cost recovery method. You should also be able to record revenues using the installment method and the cost recovery method, and report sales and cost of goods sold under both methods. Please go to StudyMyAccounting.com and work through practices you learn for examples of accounting procedures that are followed to record each of the concepts discussed in this video. Then work the practice test. Please write out your answers and check your understanding to the answers provided. Thank you for being prepared for class. It is much appreciated.